Good evening, everyone. So today we're here to talk about what is driving the Bitcoin hype and where to from here. So without further ado, let me just kick off with a bit of a story on the evolution of trade. The first thing I want to tell you, though, is that I'm an investment manager, so I need to tell you that what I'm giving you is not financial advice. This is a full disclaimer. This is just for entertainment purposes to give you some information about crypto assets and the Bitcoin world. So I'd like to start off with a bit of a story. In 2010, a programmer bought 2 pizzas for 10,000 Bitcoin in one of the first real-world Bitcoin transactions. This story lands close to home for me because I used to work at Debonairs Pizza in Sparks Road, and I used to deliver pizza. So I really hope that the guy that delivered this pizza got a 10% tip of at least 1,000 Bitcoin. And I hope Debonairs is watching and they send me some pizza for the free advertising that they're getting. Next time I'm in Sparks Road, hopefully they'll hook me up. Okay, so let's talk about the history of Bitcoin. So trade started 9,000 BC, for example. One man had a bakri and he wanted to change his sheep for 2 goats. Eid time was coming and he needed to make a plan. Now, that guy said, no, my sheep is very fat, I need 3 goats, and it became complicated to do trade. So people then switched across to coins, gold coins, silver coins, bronze coins. Some people still keep their gold coins in the safe. In our community, a lot of people like their gold, but they prefer cash. The thing propping up most of the mattresses in Durban is more cash than cotton filling the mattresses. Since 1661, cash has been around, and then credit cards, which have been a great way people love to swipe to pay, every shopper's dream. And the next evolution of payments has been Bitcoin, which is just a digital asset form of doing all the things in the past. So Bitcoin is nothing really fancy. It's just a simple evolution of the way we have done trade, which makes it better, easier, and faster. And I hope to explain that to you as we proceed. So the first thing is, let's look at the size of the opportunity. You can't ignore Bitcoin because the size of the opportunity is, at this point, $1.6 trillion in the crypto markets. So Bitcoin making up let me put this onto pointer, give me a second. Okay. So Bitcoin making up $1 trillion of market cap is a leader in a multi-trillion dollar or $1.6 trillion market cap market, right? The market trades $124 billion every 24 hours, and the Bitcoin size is 68% market dominance, and Bitcoin is 13 years old. So for something that's 13 years old to be at $1 trillion is quite a feat. I think it's something we need to pay attention to. So maybe let's look at it from a scale perspective. This is the JSE, right? So the JSE since 2003 to 2018 is currently at about $1 trillion in market cap. I've got you guys on the screen here, so when I look this way, I'm just looking at you, and I've got the presentation over there. Okay, then looking at crypto markets, since 2012, this blue line is the value of the market cap of crypto, which is at 1.6 trillion. So what we're saying is the market cap of crypto today is already bigger than the entire JSE by almost 50–60%. Okay, let's look at Bitcoin relative to banks. Okay, so relative to the 10 largest banks at the time of looking up this information, Bitcoin is bigger than JP Morgan Chase, which is about $400 billion, and Royal Bank of Canada, which is about $100 billion. So it's 10 times the size of Royal Bank of Canada. So this is just important to note that the size of this market and the size of this opportunity is something we need to take note of and something that we need to pay attention to. Okay, so now that I've maybe got your attention, let's talk about the basics of Bitcoin for all the people new to this space. We've got to understand blockchain before we can understand Bitcoin. So what is blockchain? So Mohammed here wanted to give 1 Bitcoin to Jane and 1 Bitcoin to Jackie. And if he was trading and just giving a cell phone or a car, he could confirm that with a paper transaction between 2 people. Then you have people that wanted to make transactions like Mohammed's paying from his Investec account to Jane's ABSA account. Then you have bank serve and the bank sitting in between to facilitate that transaction in a central point. What blockchain has allowed is for these peer-to-peer transactions to be done in a decentralized ledger in a way that is immutable and very transparent. So I'm going to give you more examples just to understand that. Here you got Babu. Babu's got his Bitcoin. He wants to give this Bitcoin to Cleveland. How that works is that Babu needs to enter a transaction in the Bitcoin, that in the blockchain, that he wants to pay this Bitcoin over to Cleveland. And then there are people called miners. And what miners do is that they record this transaction and confirm it. Once they confirm this transaction, that value has transferred from Babu to Cleveland. So, you know, these days you've got the BMW i3 and i8 all coming out. People are ordering their cars at BMW Supertech. Not everybody understands how that engine works. So you actually don't need to know how the cryptocurrencies work in detail. What you need to understand if you want to use something are the benefits of that thing. So if you know that your i8 can go 0 to 100 in 4.2 seconds, we're telling you here that crypto can move very fast as well. If you know that your car is reliable, here you know that crypto creates trust and it tracks and stores data in a way that there's no double spend and removes the need for intermediaries. So let me explain a little bit more because these are the three main benefits of blockchain. Okay, so the way it tracks and stores data. So transactions are in a chain, which is why it's called blockchain, and every transaction in the chain is noted by one of those or a group of those miners. So once that transaction is noted, you then cannot go back and change that transaction. So the term uses the transaction and the blockchain is immutable. And what that means is you just cannot go back and change the ledger of who owes who and who paid who. This also creates a lot of trust because the ledger is open and public and transparent. So anybody can see that from this wallet to that wallet, one Bitcoin transferred, and that transaction is now a confirmed transaction. The benefit in terms of speed is because the intermediaries are removed, and when you take out the middleman, you save money. So what Bitcoin does and crypto and digital assets do is that they save you money and time. Okay, so just to recap that, you cannot fake a cryptographic instruction. Once it's done, it is in the blockchain, it is immutable. You're removing the central authority, which is also scary for central banks and governments because now there's no government control in the middle and no central bank in the middle. And you can conduct these transactions with minimal fees, which is why there's a lot of interest in this space. So that's now the benefit of blockchain and why people are interested in it. So now let's look at the future of where trade is going. Bitcoin, for example, is just one application on the blockchain technology. Like Facebook is only one example of internet company sitting on the web. And so Bitcoin is just one small, well, at this point, it's one big part of it. But what it has done is it has opened up the door for this blockchain technology to be adopted more widely. There are hundreds of other cryptocurrency, and each cryptocurrency is like a company on whichever stock exchange you want, and each crypto has got a different purpose. So Bitcoin is still the leader, but then you've got things like Cardano, Neo, Stellar, Dash, Tron, many cryptocurrencies that make up the cryptocurrency ecosystem. So to try and simplify it for you, what we've done is we look at what are the main sectors that you find cryptocurrency in. You've got Civic, which is in secure identity management. You've got Zcash in private communication, Ethereum in smart contracts. This is an interesting one. This is called Ripple. This is an interbank settlement system, which could replace SWIFT. Dash is for fast payments. Steam is for digital advertising. So you can think about it like like you're looking at the JSE and you've got a mining sector and you've got a commodity sector or a consumable sector, banking sector. So the crypto world was also developed into sectors that do different kinds of things. And the sectors are generally these 5 types. You've got the store of value, the platform, the payment, the utility, or the stable coin, right? So Bitcoin because it came first, it has become known as digital gold and is a store of value, which has become that because we accept it to be that. On the platform side, you've got Cardano, Ethereum, Binance, and Polkadot, which are platforms on which other apps are built. These apps are called decentralized apps or dApps. On the payment side, you've got Dash, Ripple, Binance, Bitcoin Cash, and these are more payment coins. These are your utility coins here, and then the stable coins like your PAX and this is USDC, which is actually from the US SEC, and then you got True USD and US dollar Tether. Now, if you were investing in digital assets for the sake of capital appreciation, you actually only want to really be looking in theory at these top two. Now, historically, all of them have been going up, but theoretically, these are the only ones which actually should be going up in terms of what they do, because these payment tokens are designed to be stable so that you can do payments with them. And these stable coins are designed to match the dollar that they hold within. So if you are looking at digital assets for the purpose of investment, your store of value and platform coins are most likely the ones that are going to help you. Okay, so how can you invest in digital assets? So there's the DIY method, which is the spirit of crypto. Crypto is all about being independent and learning how to do things for yourself, in which case you don't need to go through a bank to get onto an exchange. You can open up your own account on Luno, Valor, Zargo, Binance in South Africa, or if you can get your money overseas, you can open up accounts at any one of these exchanges. In Santon City, they've got this Bitcoin ATM, or you can buy crypto from someone peer-to-peer. Now, what that means is you need to go and open up your own digital asset exchange. You need to understand that crypto world as if you were buying a share on the JSE. You need to know which share you're buying. You need to time it correctly. And then the key difference is you need to be able to look after the control of your assets. So your assets are not held in a separate custody. You're able to pull your assets into your own wallet where you can then manage it. Okay, so let's go to the second option is working through an investment company. So our interest is we are Stewards Investment Capital powered by RL Technology, and we offer these kind of investment portfolios, but you could go to any other investment portfolio manager as well, just to share with you how you can get involved in this. So you have some crypto portfolios which are 100% cash or 100% into crypto, like our one, where you get the market timing and we make the decisions for you. But the big difference with going with a portfolio manager is that you have safe custody of your digital assets, because most of the issues that happen with crypto assets are that these assets are stolen because people get hacked or they lose their passwords. Or the other issue, which is a very big issue, is that you lose your ability to sell in times of market stress. So going through a good asset manager will give you the ability to sell your assets quite fast. For example, in our one, we have access to 20 different exchanges. So we're able to act quite fast when the market is in stress to buy or sell something at a good price. So our one, for example, is in dollars and in rands, and there's some minimum investment amounts. If you are interested, you can let us know. The second way of investing in digital assets is something called arbitrage. And I'm going to give you some more information on arbitrage. And basically on our arbitrage funds, you'll have other managers out there. But just to let you know that the returns on these things are quite interesting. On the dollar portfolio, there's a 2% return, and that's on average over the last few months. And then there's a rand one where we aim to deliver 5% in a month, and in fact it is delivering about 7% per week for the last year. So this thing is a very lucrative thing to be looking at, and I think you'll find a lot of interest in arbitrage. If you Google about it, you can learn about this. The returns vary from 1 to 15, 16%, and we're moving quite a fair amount of money in this arbitrage system now. So arbitrage is a key trend in crypto, and it's actually linked to some of the inherent features of digital assets. So let me take you a bit through arbitrage, and then you'll understand why crypto is special in how it facilitates this. So let's talk about what is arbitrage. Right. Arbitrage is effectively when you buy a loaf of bread at Pick and Pay, and that loaf of bread costs 10 Rand, and meanwhile at Checkers they're selling bread for 20 Rand, you can stand outside of Checkers and sell that bread for 15 Rand, and you can make a 5 Rand arbitrage profit. In the same way, you can also look at Investec, right? I'm just using examples here. The Investec share price is not $100, but Investec share price in South Africa and Investec share price in South Africa and UK can be different. And then you could buy the share in one country and sell it in the other country, but that will take you 3 days to transfer the share across the different order books. The benefit of Bitcoin and digital assets is that you're able to transfer value across the globe instantaneously. So with Bitcoin, for example, you could have Bitcoin in one place at 150, in another place at 165, and then you're able to trade out this 15,000 difference. Okay, so this is something some people do this for themselves. If some of the traders are listening in on the call, they already know about arbitrage. This is something some investment managers offer. But I'll explain to you how arbitrage works. If it's something you want to learn more about, you're most welcome to try this. Okay, so for example, now you've got a Bitcoin, which is on Coinbase, Binance, and across a number of different exchanges. And then you've got exchanges in South Africa. So you've got Luno, Vela, as I've explained. I'm just showing you Luno. Okay. Each of these places have a different price versus the other. So you're getting one commodity, one loaf of bread with 10 different shops, and each shop has a slightly different price for that loaf of bread. Right. Now what we can do is we can buy that loaf of bread in the cheapest place, and then we can transfer that loaf of bread to the more expensive place and execute that transaction. So it's all about speed of execution in arbitrage. Our software at this point, we trading blockchain transactions in about 27 milliseconds, but you don't have to be that fast. If you want to try and do this on your own, you can, open accounts with all of these exchanges. You can also make these payments across, and you look for the ones where the price is higher, and then or lower, you buy at a lower price and you sell in South Africa. If you're going through an arbitrage manager, for example, with us, what we do is we have Investec Bank in South Africa that collects 150,000 Rand for an investor. We then send the money across through Mauritius to our New York bank account. Our software picks up the money. It then drops it in all these different exchanges across the world. The software will work out for you which returns are the best. It will buy the Bitcoin at the best price and it will sell it out, and it seamlessly does all of this for you. So I really recommend that this is something that you learn about for yourself, or if you wish to invest in it. This whole thing happens 7 times, 7 cycles, because it's limited by exchange control. Exchange control limits how much arbitrage you can do through the single discretionary allowance, SDA, or the FIA, foreign investment allowance. So on a typical SDA, you can make about 9,000 Rand. And then if you do your FIA, which is a 10 million allowance, you can earn up to 110,000 Rand. So in total, if you were interested in an arbitrage, this could give you a return of 110,000 Rand on 150,000 Rand investment. It's about 73%. This is based on historic. There are no guarantees. If you decide to do this with us, this is not something that we promise you. And if you decide to do it on your own, we're not recommending that this is what you will achieve, but it is very achievable and has been done in the past. Okay, so that's the investment side, and that is how you can allocate to digital assets. Another thing that's important for the use case is what you can do in the new system. So, for example, there are many opportunities with this new technology. You are able to look at software systems and asset management systems. So I'll give you an example. Hopefully it will inspire some of the entrepreneurs out there who are interested in the space. There's a lot to learn, and there's a pioneering space. So the more we build and the more we look at this, I think there are a lot of opportunities. So our platform is an asset management platform, and what we're able to do is, you've seen that there's multiple exchanges in various places, and what our software does is it has API integration to pull the values and prices of all the cryptos in the various exchanges and pull it all into one place. So then you can see the valuation in one place. So here we've got, for example, I've shown you about 10 exchanges. Each column is an exchange, and each row is a crypto that you can trade. And this software then pulls all of this information, which is something that we never needed before because everything was on one exchange. So because of this digital assets on multiple exchanges, it's created a need for a new type of software. And like this, you'll find many other new projects of people are doing new ways of doing digital asset management. Within the software, we've also managed to build smart algorithms which trade are like almost like AI, where you can program what you want the software to do, and it will work out calculations of order book overlap and can trade cost plus or market making trades across various exchanges. Okay, so if you're not sure and you don't really want to get into this space, this is an example of how much of volume increase we have seen. So our business has been running since 2018, and here it wasn't trading very much. As we hit December, January, the software is now trading in excess of 1 billion rands per month. So it's definitely something exciting. It's definitely something I think I'd recommend that the young accountants and programmers out there pay attention to this space. Our business runs in Mauritius, Australia, South Africa, and the US. And just to share a bit, the team has done a great job. They've won some good awards, the TT100 awards, and they've also won Google Startup Funding, which is I'm very proud of the team on that front. Okay. So to talk about the services in the software space, we look at portfolio management, treasury management, remittance, brokerage, liquidity provision, algorithmic trading, and collateralized lending. Now, all of these solutions are things which exist in the traditional world, but because this new asset class has emerged with new characteristics, there is a new way to offer these services. And that's where I think a lot of opportunities are. And I'm just scraping the surface here. There could be a lot more for the community to look at. Okay. Of course, whenever you're building software, you also need to be very cognizant of user experience and user interface, which is also something very important. And there's a lot of opportunities in this space as well. Okay, so that's enough about the background, where we have come from. Now to get to the interesting part, and I think what Zain wanted to know is where to from here. So you've seen the size of the opportunity, and you've seen what has been built. Now, if we overlay the traditional markets, Amazon, Google, Apple, YouTube, Facebook, these applications have revolutionized the way we do things. Nowadays, you find your children are watching things more on YouTube than watching TV. People are buying things more on Amazon or in South Africa on Takealot than actually buying it in the shop. So these things have changed the way that human behavior behaves, and it all sits on the internet. Blockchain is changing the way that we do things as well. So for example, you can already go on booking.com and buy your accommodation on booking.com using Bitcoin. So, I know people are in COVID lockdown, and maybe you want to take the wife somewhere special, or the wife wants to take the husband somewhere special. You can always use your Bitcoin to go on a little getaway to Tiramok Marine. Unfortunately, if the husband is nagging or the wife is nagging, you also can buy earphones. You can see here on Amazon that you can buy your Bitcoin. You can use your Bitcoin to buy earphones on Amazon, and you get a discount for using your Bitcoin. So there is a lot of usage for Bitcoin already available. For us as South Africa and Mauritius, we always look at Africa as our home. We can see that in Nigeria, 32% of the population is already trading cryptos. When we look at in South Africa, we've got Invelo Ventures, which is partly funded by Capitec Bank, has bought into Zago, which is a leading crypto network. And in Mauritius, the regulator has recognized crypto as a digital asset and introduced new licenses to allow this. A very strong brand in South Africa is Investec, and Investec even has their digital asset vault. And what this is like a digital asset custodian, which is currently in a regulatory sandbox environment. Okay, so I've told you a lot of good things about the space, and I think it's very important to highlight that there are a lot of risks as well. So whenever you're looking at this space, you must always remember that Bitcoin is an extremely volatile asset, and I'll share with you a few slides to quantify that volatility coming up. There's always the possibility of corruption, and I did say that the blockchain is immutable, so you cannot mess with the blockchain, but unfortunately, you can get somebody hacking into your account or your wallet because they ask you a question and you somehow give them your password, or they find a way of hacking into how you have stored your information, or one of the exchanges has a glitch. So there is always the risk of something going wrong, which you need to be aware of. It's also very important to note that digital assets are still unregulated in most countries of the world. And what that means is if something goes wrong for you, you can't go and complain to the ombudsman or the regulator because they told you it was unregulated. So you have to be very careful with what you do in the blockchain space. And then you have whales dumping. This is a crypto term. It doesn't refer to whales doing their natural business. It is just more about a whale is a crypto holder who has a large amount, and when they sell a large amount of crypto, you see a lot of market volatility. Okay. So in 2021, we've seen Bitcoin hit all-time highs, going through this $1 trillion mark. Right? So who is buying all of this Bitcoin? We have here the major holders of crypto in the mainstream space. Right? So MicroStrategy is a Nasdaq listed tech company which started buying Bitcoin. Now has $5.2 billion worth of Bitcoin. And instead of actually being a tech company, they've become more of a Bitcoin ETF. That's a very interesting change in their application of their business. One of the largest holders of Bitcoin is Grayscale, which has got $37 billion worth of Bitcoin. And of course, you can see Square, which has 192 million used for payments. You've seen Tesla recently. Elon Musk bought $1.5 billion of Bitcoin. Galaxy Digital is also an asset manager which has $950 million of Bitcoin. So there are really big transactions happening, and these transactions are being done by mainstream companies, which is increasing their interest in this particular space. Even the Chinese companies like Meitu are buying crypto. They bought 40 million in Dubai. Karam Shroff, the chairman of IBC, has committed to a $4.6 billion crypto transaction, and he's also very big in the Ethereum space. In Thailand, you will soon be able to use your Bitcoin to pay for your trip. I'm trying to convince them here in Mauritius to do something similar. So maybe you'll see in Mauritius as well that you can use your Bitcoin to pay for your trip. Okay, so there's been a lot of noise in the media about Bitcoin. So if you look at the tweets, Michael Saylor, who is one of the leaders in the digital asset space and the CEO of MicroStrategy, Michael Saylor had a choice in 2020, and he looked at gold versus Bitcoin, and you can see that Bitcoin has greatly outperformed gold over that last period. Our South African counterpart, Mr. Elon Musk, one of the most famous South Africans at the moment, he says that buying Bitcoin is not smart, but he says buying Bitcoin is just less dumb than holding cash, because with the amount of inflation and money printing, cash is losing a lot of value. MicroStrategy, again, this guy, Michael Saylor, he tried to raise $600 million for Bitcoin, but instead he raised $900 million. Sorry, $600 million, he raised $900 million. So there is a lot of demand for this digital asset and interest in this space. even the central banks, this is from Wall Street Week on Bloomberg, and they are telling us that every central bank is focused on cryptocurrencies. That doesn't mean it's good. They focus in cryptocurrencies in different ways. So some central banks are looking at cryptocurrencies positively and want to incorporate it into the ecosystem. Some central banks are trying to ban cryptocurrencies, which is a risk. I think India a few days ago had a bad announcement about trying to block certain crypto transactions. And then you even have central banks wanting to make their own cryptocurrencies, which are called central bank digital currencies. So those are something interesting coming as well. Either way, digital currencies will be the next way of payment for sure. So after credit cards will come a digital currency. What currency that currency is going to be is the question. Whether it will be a digital currency from a particular reserve bank, like a digital version of a rand, or whether it will be something new, like a Bitcoin Ethereum based type transaction. Okay. Again, I want to stress the risks with cryptocurrency. This is Bitcoin dropping in 2 days. Bitcoin lost 12%. This is the founder of Kraken. Kraken is one of the big exchanges, and he had to comment about why Bitcoin fell below $50,000 per Bitcoin. And actually, it was Elon Musk that made an interesting comment, and Bitcoin then just started to tank. So that was on the 23rd of February. And then if you look at just a few weeks later, on the 9th of March, Bitcoin is surging again. Right, so it's a real roller coaster ride. Look at the smiles on these people's faces. You know that they have some Bitcoin, but you can't actually get emotional when you're looking at Bitcoin. It's a roller coaster ride. You're gonna get very sad and very happy. You need to make that investment and not be too emotionally attached to it. Okay, again, MicroStrategy buying Bitcoin, $10 million. And then the big news is this recently on the 13th of March, Bitcoin hit a new high, $60,000, right, per Bitcoin. So let's try to understand why. Why is Bitcoin continuing to escalate in value? It's a simple calculation of the balance between supply and demand, right? So the supply of Bitcoin is increasing, but it's increasing at a decreasing rate. Right? There's an programming which results in an event called the halvening. Right? So what happens is every so often the amount of Bitcoin which is minted from mining activities gets halved. So the last the last halvening event, the halvening went from 12.5 to 6.25, and that was on the 11th of May 2020 last year. After that, the next halvening event will be on 2024, and the amount of Bitcoin minted will then reduce to 3.12. So Bitcoin supply is increasing, but it is increasing at a decreasing rate. On the other side of the scale, you've got demand, right? And our interpretation, and this is just my view, and it's not advice, our interpretation is that the demand for Bitcoin, I mean, look at the Minara's interest in this topic today. It wasn't a topic of interest last year or 5 years ago. We're now in a position where Bloomberg is talking about it. People are all very interested in having this as a store of value, and all of this is increasing the demand for Bitcoin. So let's look at the biggest reason for the increase in demand is our big stimulus money printers, the Fed and the ECB continuing to pump stimulus into the market to hold up asset prices. And the more stimulus you get into the market, eventually this inflation will come, and it is very evident in inflation hedge assets like Bitcoin. It's very strange that gold and silver haven't yet moved aligned to Bitcoin, but you can see in soft commodities that the prices of goods have already increased because of inflation and excessive money printing. Okay, so if you had bought some Bitcoin in 2020, right? This is the beginning of March 2020. Bitcoin has done 10,000%. So 1,000%, right? So that is 10x, 10 times return. So this all looks very exciting, and then people all think, okay, either they think I've missed the boat here, or they think I'd like to invest in Bitcoin because I won't lose my money. And you need to be very careful. So although the graph has gone up, and I'm showing you the big picture, in the small picture, there are big downturns and crashes in the Bitcoin market. So here I've highlighted three periods. The first one was a 31% crash. The second one was a 25% crash, and the third was a 14%. So these, I mean, they call it a correction. The uptrend is still going up, but if you had timed this thing incorrectly and then you panicked at the bottom and you actually sold it out, you can lose your money. So you just need to be very careful about what you're doing when trading cryptocurrencies, because it is highly volatile. So I'll give you a bit of a secret sauce investor tip. This is something that we use. Is one of the indicators that we use to understand what cryptos or how the market sentiment is looking. This is the Grayscale Bitcoin Trust and the premium to NAV or discount to NAV. So what this means is when this graph is positive, it means that institutional money that cannot buy Bitcoin directly is pumping up the price of this ETF. So at one point, 40%, people were willing to pay 40% more than the Bitcoin price just to get access to it, because they couldn't buy the Bitcoin as a traditional investment manager. They had to go to the traditional compliance way and buy to an ETF, and they were willing to pay 40% more to do that. You'll see now that Bitcoin is actually trading at -7, right, which hasn't actually happened before. So this is something you should be just very aware of. And if this thing goes further down into the -20s, it would be a very negative indicator as to where Bitcoin price could go in the short term. On the other hand, it could also mean just that the Bitcoin price has run ahead of the market, and this screenshot was taken when Bitcoin was at about $60,000. So we look at this with many other indicators, so you can't just look at the one indicator. But just to give you a tip, this is something interesting you can look at if you want to start trading Bitcoin. Okay, guys, so just to give you a few key takeaways and summarize, the adoption of Bitcoin is becoming wider and wider. We now have institutional and the general public all investing in digital assets. Some people say it's horrible, and some people say it's the future. So there is a mix, and there's always a debate. Not everyone has to agree on things, but the debate is now there in the institutional and the general public. It is a huge opportunity. The opportunity also does present high risks. The opportunities, as I've said, you've got the opportunity to buy cryptocurrencies yourself on an exchange and invest in it. You have the ability to invest in seg portfolios or with an asset manager who can manage the risk for you and give you risk-adjusted returns. And then as a career opportunity, as an entrepreneur, there are a lot of opportunities in this blockchain space, building software, and you can be sitting in your balcony as I sit, or in your garage, and you can then be running an international business in the blockchain, which doesn't require much capital costs or big offices or anything. So it's a really great space to be looking at in terms of opportunity. If you are looking to invest into digital assets, again, I'm not giving you financial advice, but just to tell you, it's either 0 to 10% of your assets. If you remember the faces of those people on Bloomberg and how happy they were, they don't show you the faces when the people are sad. You don't want to be putting the bulk of your assets into a digital asset portfolio, as it will be a roller coaster ride. Okay, so the Minara has got a special discount code with our business. And what we're able to offer is discounted fees to any registered Minara member. I think Zain has gone into load shedding there. And if you use this code, you'll get a discounted fee. From an Islamic perspective, Please remember to pay your zakat on your crypto. Mufti Faraz Adam has issued a fatwa that Bitcoin is, you should pay your zakat on cryptos. And whether or not crypto is halal, it depends on the particular crypto. So speaking for Bitcoin, if you do own Bitcoin, you then need to look at the value of that Bitcoin on an annual zakat basis. The other coins, in the 100 coins, some of them are involved in gaming. Obviously, that won't be halal. You have to just look at the purpose of the coin, as you would have a Sogo-san share is not something that is halal. You can't buy that. It's just the share is just the mechanism, as the crypto is just a mechanism. You need to look at the underlying purpose of each crypto to understand its purpose and whether or not each thing is halal. So there will never be a clear halal or haram in cryptocurrencies, as you can't say shares are halal or haram. It is the business of what that entity is doing that becomes halal or haram. Also, remember SARS is watching you. SARS says that you need to declare all your crypto transactions. And just to highlight this further, this was actually today. SARS is cracking down on people who are trading crypto and not disclosing. They have reached out to one of the exchanges called Luno, and they are testing what taxes people have paid. If you hold your crypto for the long term, it's a capital asset and you can treat it as capital gains. Again, I'm not giving you tax advice. This is just my opinion. You need to seek your own tax advice. If you are trading crypto, then it is included in your tradable, your income and tax at your marginal rate. Okay. So Zane gave me 45 minutes. I think we had 43 minutes. I don't know if if we've lost Zane, because I saw it did get dark just now. In closing, just to take you back to the story of the pizza guy. This programmer, Leslo, he paid 10,000 Bitcoin for these two pizzas at $60,000. I just rounding it here, but the actual amount that he paid is $613 million for two pizzas. So I hope Devonez did give him a free 2-liter Coke or something with that pizza. And I hope he did give the delivery guy a good tip. So it's just an interesting space. I hope it was useful for you. Just again, not financial advice at all. Please remember that crypto is very volatile. It's a high risk investment and you need to trade very carefully. Thank you very much for your time.